Right now, the Dow is off about 138 points. We were off 142 just a couple of seconds ago, so near but not at the lows of the session. It's time to stop trading. Jim Cramer is here, and you know, Jim and I were just talking about really the whipsaw, right? You hit 14,000, then next day you're down 150, then you're up 100, then you're down 150.
Well, I mean, I think
you could forgive someone for being confused.
Absolutely. And I remember one Friday, I devoted my whole game plan to sell this week because we've been so greedy, frankly.
Right.
But we didn't get to 14,000 by accident. 27 out of the 30 Dow stocks, despite what you may hear, do not need the bond market. Now, we all think everybody needs the bond market. I lived through the collapse of the junk bond market in the Milken time. It was one of the single greatest buying opportunities of my life. So I'm not willing to say, okay, all in. Bond market bad, sell everything. I think some stocks have had a big run. It's really Exxon that's pulling things down today. But or American Express, which was boosted, I think, incorrectly by a Goldman Sachs report that was very aggressive. But all I'm saying is that I really, I got to try to put a little balance from some of the people who you had on, who are doing their very best, but to say, you know, if you're going to freak out and sell 27 out of the 30 of the Dow stocks because of the bond market, it's because you've never done a stitch of homework about those 27.
But I think what they're saying, and let me just say their point here. All right, 27 of the 30 Dow stocks aren't out there issuing bonds.
Buying back stock.
But they need the bond market because it is the bond market and cheap financing that has fueled a broader rally in the market because people are expecting takeovers. And I think those who are...
Verizon needs it.
Verizon has benefited from an overall...
Verizon needs treasuries to be lower so that you buy Verizon because the yield's so good.
Right, but what I'm saying is people aren't saying it's because these companies need to use the bond market to finance. They're talking about the overall market has been going up because of the expectation of companies being taken out.
I'm focused on the average that hit the 14,000 high, and I'm just saying that was predicated upon excess liquidity on their balance sheets, which then caused them to buy back stock.
Okay.
Not because they went out and went to Goldman and said, look, I need a loan. These are companies that want the stock market down so they can buy other companies. They're tired of private equity competing against them. All I'm saying is that we've got to look at the market, not monolithic. It's absolutely true that Blackstone needs this market to be better. Countrywide needs it to be better. But if you're sitting there and you're Intel, you're thinking, what do I do with all my cash? Do I go out and build more plant? Or should I just buy back stock? If you're Microsoft, you're facing that same dilemma.
Why we may go down overall because we have some inequities.
I've been saying that every single
individual basis.
I have been saying that the financials are awful. I have been outright saying that J.P. Morgan is a short here. I think that the HGX, the Philly Housing Index, is a screaming short. I would be buying puts on every single home builder. I question whether one of these home builders won't go bankrupt. I think that Countrywide quarter was a quarter from hell. I think that all these things are happening, and yet it's 20% of the S&P, and I think that in the end, you can't hold it against Halliburton for that beautiful number. The reason why Transocean is going up is because successful Schlumberger said on the quarter, everyone's drilling around. I urge people to look at the market not as an entity that is controlled by the bond market, but to look at stocks that are controlled. And I just was more negative than anyone else who's ever come on air and basically said, short Jamie Dimon. I challenge any bear to come on and say what I just said. But I'm also saying maybe go long something that yields 4% that's good, like an ATT.
I think you have a great point, because what you're basically saying is people who had been in there with sort of broader market strategies, as in buy the spiders or buy the QQQs, an exchange trade fund for the overall market, that may just really be a bad call.
Look at the Investor Business Daily Index of mutual funds. You think those guys are not sweating the subprime program? Not anybody who's up 20, 30%. But you know, look, I think that Lennar, frankly, is 25% too high. I want to find a bear who'll come on and say that. I am not only I am a relentless bear on financials. But I also think, well, wait a second. You know, I hope Exxon comes down a lot before they report. Schlumberger back to 93 after that beautiful quarter. They are, they have so much money. Well, I just want to distinguish who needs the bond market and who doesn't.
Right, and I think it's interesting how you're saying it. There's a difference between the broader market, which may go down, and individual names which may go up.
The only thing Schlumberger knows about Blackstone is how do you drill through it to find oil.
I want to squeeze in one other thing, though, here before we go, and that is Apple. Down because, and I've heard different arguments out there about these numbers. The iPhone, some people saying, yeah, it was weak because there wasn't enough of them, it would have been all right.
I don't know.
What do I do with Apple today?
I think, I said on Friday, I was very clear, you sell Apple. It's one of my four horsemen, but I said you should sell it. The expectations got too high.
Yeah.
I have an iPhone. It's really easy to set up. I'm not buying that argument. You just go to iTunes. So I think Apple's too high. Apple was up on a short squeeze on Friday, caught because people were selling the July 140 calls, and they got totally bamboozled. I let Apple come in. I'm not worried. I think Apple long-term is great, but anybody who owns Apple after it went from 90 to 140, shame on you. Shame on you for not taking anything off.
All right, the greedy pigs. If you had your sound effects, you'd be
GM,
using them.
Citigroup, and J.P. Morgan all need that bond market. I'm long Citi. I'd love to be up for my charities. I'd love to be able to short
but
JPM.
you know what? You heard my fund manager, Bernie, say Ford could double or triple over the next couple of years.
I thought he made sense, but I don't like that stock because it has to do with the bond market.
All right, Jim. And you can see a lot more of Jim. He's got more great